we break through that high and make a higher. So at this point, I'm not interested in going short and trying to ride this trend down until I get actual confirmation. And do we get it here as we push back up? No, we get a move up that ends up closing above our previous high. We get no rejection at this level. So what I'm waiting for is when this market is pushed down, we get a push back up to that same level, and then we see rejection being this red candle right here. And my exact rules for this, I'll go ahead and share them with you, is that for a double top, I am looking for the market to push up and get between the high of the wick and the highest bodies of this entire little area. I'll explain that in just a second. Whenever I get this a little bit darker for you. So this is my area. It's between the highest bodies of this previous swing high and the highest wick of this previous swing high. What I want to see is wicks of candles touching this area. Bodies of candles can close in this area. The only thing that cannot happen is I do not want to see a close above here, because that's exactly what's been happening, right? That's not showing rejection. Close above, close above. What I want to see is rejection. So a wick needs to get into this zone, or a body needs to get into this zone of a candle, and then I want to see a red candle showing me that sellers are trying to take control. When you combine all of that, and you have your alignment with a higher time frame trend, you have the market inside of a major swing level, the previous one that was broken, that is major structure, and that's one of the most likely places for a market to continue in trend. And you add all of that to an objective entry reason as powerful as a double top with selling pressure afterwards, that being that red candle, then what it creates is a consistent way of trading, because there's rules for every bit of it. So that equals consistency, right? And it creates a money-making edge played out over a large sample size, at least from my own point of view and my own trading that I have done with this strategy. It has been one of the best I've discovered in the past 10 years of my own trading career. We all know already how this bad boy played out, but we'll hit play and watch it one more time because it was a beautiful trade. And earlier I said it took 2 hours. I think it took like an hour or so for this whole trade to play out and hit about a 2.4 to 1 reward to risk ratio. But this is a bearish version of the strategy. Hopefully that was extremely clear, but just to clear things up a little bit further and to give you an example of a bullish version of this, what we're going to do now is go to a different chart, take a look at a bullish version of this strategy. I'll see you there. So remember when I was saying that this works on all different markets and in all different time frames? Right now we're going to be looking for a trade on the 15-minute chart. So what time frame will I be looking at if that's the case for my trend identification to make sure I'm on the right side of the market with this trade? I'm trading on the 15-minute. I want to look up at the 1 hour chart for my trend identification and that major swing level that was broken last. Just to be sure that you understand this, because it is a pivotal part of your trading career to understand major swing levels and how to draw out a trend. It will play a vital part in nearly any strategy that you try to trade, or if you're just someone that is going to trade with a discretionary approach, you need to understand how to identify trends. So from this being our starting point, we have a push up to a major swing high, pull back to a major swing low, push up to a major swing high, pull back to a major swing low, push up. Where do we break this level? And remember, feel free. No way that's going to work. Remember, feel free to put horizontal lines at your major swing levels. So at this point, we know that this would be our major swing level if we had more to pull back. Really, it's right here. Again, no way to make this completely objective. Just depends on how you see the market. From here, I would go to here, then move my horizontal line up. We have a major swing level that's broken here. So now we would have this move to a major swing level, back down to an equal low for our major swing level. Back up now. Where do we break? Here. Right over here, right? Since we broke right here, that means that I'm now looking at this as my next major swing level. This is my next major swing low, major swing high. If we move the chart forward now, and I click the button one time, you'll see that we have this pullback. So what are we doing? We're in an uptrend. Which direction do we want to trade? To the upside, right? What do we need to point out? We need to point out and draw a zone near our last level of resistance, our last major swing level, which is these two right here. I'm combining them here because they are so close together height-wise. Since they're both really, really close to around the $278 mark, I'm just putting that in the middle of the zone. This is just how you'll have to draw a zone. They're not lines on a chart. Support and resistance are a lot more like zones. So in this case, we have our area that we're looking at, the previously broken major swing level. Again, we're just splitting the difference between these two because they're so close together. And we have to mark it in this area. What's the next step? At this point, our actual trading time frame, which is going to be the